Bitcoin just crashed below $70,000. And I need you to stop whatever you're doing right now. Because what happens in the next few days could either be the best buying opportunity you've seen all year, or the beginning of a freefall that takes Bitcoin all the way back down to 61,000. Maybe lower. Over $767 million in positions got liquidated in the last 24 hours alone. Gox is moving coins again. Strategy, the company that was literally buying Bitcoin every single week, just sold for the first time in almost 4 years. And the fear and greed index has crashed into fear territory. So which is it? Disaster or discount? Stay with me, because by the end of this video, you're going to know exactly what the data is saying and what smart money is actually doing right now. Here's the thing nobody is telling you right now. Every single time Bitcoin has broken below a major psychological level in this cycle, people panicked. And almost every single time, it bounced. Hard. But here's the catch, and this is what keeps me up at night. This crash is different from the others. Because this time, it's not just retail selling. It's not just nervous hands. The institutions, the same Wall Street players that were supposed to hold this market up, they are pulling money out at a historic pace. We're talking about $4.2 billion in Bitcoin ETF outflows in just 3 weeks. 4.2 billion. So the question isn't just, will Bitcoin bounce? The real question is, without institutional buying, what's actually holding this market up? I've dug through the on-chain data, the technical levels, the macro environment, and the expert analysis. And I'm going to lay it all out for you, right now. No fluff, no hype, just the facts. Welcome back. If you're new here, this channel covers Bitcoin, crypto markets, and the U.S. economy with zero BS and zero bias. We're here to help you make better financial decisions. And today's topic is one of the most important conversations happening in the crypto space right now. My name is Host Name, and today we are breaking down the full picture behind this Bitcoin crash, where it came from, what's driving it, what the key price levels to watch are, and most importantly, what you should be thinking about right now if you hold Bitcoin. Here's our roadmap for today's video. We're going to start with why Bitcoin crashed. And it's not just one reason, it's a perfect storm of at least 4 separate factors all hitting at the same time. Then we're going to look at the critical support levels, including the one number that analysts say could trigger a complete freefall if it breaks. After that, we're going to look at what the on-chain data is actually showing us about what long-term holders are doing. And finally, we're going to talk about whether this is a buy signal or a warning sign and how to think about positioning right now. Let's get into it. All right. Let's talk about what actually happened. On June 2nd, 2026, Bitcoin broke below $70,000 for the first time since April 8th. And here's what made this particular drop so sharp. It wasn't one catalyst. It was 4 of them hitting simultaneously. Think of it like 4 hammers all swinging at the same time. Hammer number 1, Gox. Yes, Gox is back in the news, again. The infamous collapsed Bitcoin exchange has been moving large amounts of Bitcoin, and every time those wallets stir, the market freaks out. Why? Because Gox still holds billions of dollars worth of Bitcoin that could be distributed to creditors, which means potential selling pressure hitting the open market. We saw this pattern before, and the market reacted the exact same way this time, instant panic. Hammer number 2, Strategy sells Bitcoin. This one shocked the market. Strategy, formerly known as MicroStrategy, the company run by Michael Saylor, the most famous Bitcoin bull on the planet, the company that has been buying Bitcoin almost every single week for years, just sold Bitcoin for the first time in nearly 4 years. Now let's be clear. The amount they sold was relatively small compared to their total holdings, but it didn't matter. The signal was devastating, because if the biggest institutional Bitcoin bull in the world is selling, even a little bit, what does that tell the market? It tells traders something might be wrong, and so what do traders do? They sell first and ask questions later. Hammer number 3, geopolitical shock. On June 2nd, reports emerged that Iran had suspended peace talks with the United States. That single headline triggered a massive risk-off move across all global markets, not just crypto. Stocks dropped. Gold moved. And Bitcoin, which in moments of fear often trades like a risk asset, not a safe haven, fell hard. The lesson here is one we keep learning over and over. Bitcoin does not yet behave like digital gold in times of geopolitical crisis. At least not consistently. When fear spikes, retail investors and even institutions hit the sell button on everything, and Bitcoin is always one of the first things to go. Hammer number 4, the ETF exodus. And then there's the bigger, slower-moving story underneath all of this, the one that's been building for 3 straight weeks now. Bitcoin ETF outflows. Over $4.2 billion pulled out of Bitcoin ETFs in just 3 weeks. The week ending May 29th alone saw $1.67 billion in withdrawals, the second largest weekly outflow of all of 2026. And critically, there has not been a single positive inflow day since May 14th. Think about that for a second. The entire promise of Bitcoin ETFs was that they would bring sustained institutional buying to the market. And right now, those same institutions are walking out the door. When all 4 of these hammers land at the same time, you get exactly what we saw on June 2nd. A decisive break below $70,000, $767 million in liquidations, and a fear and greed index reading of 29. That's deep fear territory. Now let's talk about the technical picture, because this is where it gets really important. Bitcoin right now is sitting in what technicians are calling a critical decision zone. And there are 3 levels every serious Bitcoin watcher needs to have burned into their brain right now. Level 1, 69,000 to 69,600. This is your immediate support. This is the zone Bitcoin needs to hold right now to even have a chance at stabilizing. If buyers step in here, we could see a bounce attempt back towards 71,000, maybe 72,000. But notice I said attempt, because the chart structure right now is showing a classic series of lower highs and lower lows, which is the technical definition of a short-term downtrend. Level 2, 64,000 to 66,000. If 69.6 breaks, this is the next major floor. Analysts are calling this the line in the sand for 2026. This zone corresponds to Bitcoin's lows earlier in the year, and it's where long-term buyers have historically stepped in during corrections. A move towards 64,000 would be painful, but it wouldn't necessarily break the longer-term bull market structure. Level 3, 61,000, the danger zone. And here's where it gets serious. If 64,000 gives way, some analysts are pointing to 61,000 as the next logical target. At that level, we'd be looking at Bitcoin down over 50% from its all-time high of $126,000 hit in late 2025. That's the kind of number that triggers real panic and potentially a self-reinforcing selling cascade. One quant analyst put it bluntly, and I'm paraphrasing here, if 70,000 doesn't hold, the door to 65,000 swings wide open. Now here's what the bulls will tell you. They'll point out that Bitcoin's RSI, the relative strength index, is sitting near 34. That's approaching oversold territory. Historically, when Bitcoin's RSI gets this low, it has often preceded significant bounces. And they'll remind you that despite all of this selling, the long-term bull market structure is technically still intact. Bitcoin is still way above its 2024 and early 2025 lows. The halving cycle is still in play, but technicals only work until they don't. And right now, momentum is clearly with the sellers. So what are the experts actually saying? And more importantly, what is the on-chain data telling us that the price chart can't? Let's start with open interest. This measures the total number of open long and short positions in the Bitcoin derivatives market. And right now, open interest has been falling alongside the price. That's significant because when price falls and open interest falls together, it typically means long positions are being closed, not new shorts being opened. In simple terms, people are getting out, not necessarily betting against Bitcoin, just exiting. That's actually less bearish than it sounds. It means the market isn't necessarily loaded up with aggressive short sellers waiting to push the price down further. It may just be exhausted longs taking their losses and walking away. Now, what about the long-term holders? Because this is where it gets interesting, despite all of this short-term pain. Long-term Bitcoin holders, the wallets that haven't moved their coins in a year or more, are actually accumulating. Not selling. Accumulating. This is one of the most powerful signals in crypto. Because long-term holders are historically the smartest money in the market. They bought Bitcoin at lower prices. They held through previous crashes. And right now, they're treating this dip the same way they've treated every other dip, as an opportunity. Standard chartered analysts have also chimed in with their longer-term view. Despite the current pain, they're maintaining a bullish long-term outlook. And Coinbase's institutional research team points out that regulatory clarity continues to improve in the U.S., which should support institutional re-entry into the market once the macro picture stabilizes. The picture that emerges from all of this short-term pain. But the foundational thesis for Bitcoin, scarcity, institutional adoption, regulatory progress, none of that has changed. Now I always want to give you both sides. So let me be very clear about the risks here, because there are real scenarios where this gets significantly worse before it gets better. Risk 1, macro deterioration. The U.S. economy is sending mixed signals right now. If we get bad inflation data, a hawkish Fed, or further escalation in geopolitical tensions, risk assets across the board sell off. And Bitcoin, like it or not, still trades as a risk asset in the short term. Any macro shock from here could push us directly toward those lower support levels we talked about. Risk 2, more MT, Gox distributions. If MT, Gox creditors receive large Bitcoin payouts and choose to sell, that's billions of dollars of potential sell pressure hitting the market. We don't know how many creditors will sell. We don't know when. But the uncertainty alone keeps a lid on any recovery. Risk 3, ETF outflows continue. If institutional money keeps leaving Bitcoin ETFs and doesn't come back, the market loses one of its most powerful demand drivers of this entire cycle. Total ETF assets under management have already dropped from $104 billion to $94 billion in just weeks. If that number keeps falling, the psychological impact alone could trigger more selling. Risk 4, the 64,000 level breaks. This is the tail risk. If Bitcoin loses 64,000, we could see a real cascade. Some analysts are putting targets as low as $50,000 in a worst-case scenario. I'm not predicting that, but you need to know it's on the table. Crypto is volatile. It has always been volatile. Never invest more than you can afford to lose. And always have a plan before the market moves, not after. Okay, here's the question you've all been waiting for. Is this the buy signal? Let me give you the honest answer. It depends on your time horizon. If you're a short-term trader, this is not a clean setup. The technicals are bearish. Momentum is down. There's no clear reversal signal yet. Trading into a falling knife is how people blow up accounts. If you're playing short-term, wait for confirmation. You want to see Bitcoin reclaim 71,000 and hold it for at least a couple of sessions before you even think about going long aggressively. But if you're a long-term investor, this is exactly the type of environment that has historically created generational buying opportunities. Think about the data. Bitcoin hit an all-time high of $126,000 in October 2025. It's now trading near 67 to 70,000. That's a 44% correction from the top. In every previous Bitcoin cycle, corrections of 40 to 50% from the high during a bull market have been followed by new all-time highs. Every single time. Now, past performance doesn't guarantee future results, I have to say that. But the structural case for Bitcoin has not changed. The halving is still in effect. Institutional infrastructure, the ETFs, the custody solutions, the regulatory framework is all still there. Long-term holders are accumulating, and the U.S. regulatory environment, while imperfect, is clearer today than it has ever been. One analyst price forecast for Bitcoin by end of June 2026, if it can reclaim those key moving averages, is a potential recovery towards $76,000 to $78,000. And several firms maintain year-end targets in the 100,000-plus range if macro conditions cooperate. My personal take. If you've been wanting to buy Bitcoin and you didn't buy at 75,000 or 80,000 because it felt too high, at 67,000 with RSI near oversold, with long-term holders accumulating, that should at least be on your radar. Dollar cost averaging, buying small amounts consistently rather than all at once, remains one of the most sensible strategies for volatile assets like Bitcoin, regardless of market conditions. But again, do your own research. Talk to a financial advisor. This is not financial advice. It's analysis. Let me bring it all together for you. Bitcoin crashed below $70,000 on June 2, 2026, driven by four simultaneous forces. MT, Gox wallet movements, strategy's first Bitcoin sale in 4 years, U.S.-Iran geopolitical tensions, and 3 straight weeks of massive ETF outflows totaling over $4.2 billion. The key levels to watch: 69,600 as immediate support, 64,000 as the major floor, and 61,000 as the line that, if broken, could signal something much more serious. Expert analysis and on-chain data show short-term pain, but long-term holders are accumulating, institutional infrastructure remains intact, and the halving cycle is still in play. For short-term traders, Wait for confirmation before making moves. For long-term investors, this could be exactly the type of dip the data suggests has historically been a buying opportunity. But manage your risk and never invest more than you can afford to lose. The market is fearful right now. And as a certain legendary investor once said, be fearful when others are greedy and greedy when others are fearful. Whether this is the bottom or not, only time will tell, but you now have the full picture. And that puts you ahead of 99% of the people reacting emotionally to headlines right now. If this video helped you make sense of what's happening in the market right now, do me a favor and hit that like button. It genuinely helps this channel reach more people who need this kind of clear, no-hype analysis, especially during moments like this when social media is full of panic and noise. And subscribe if you haven't already, because we are going to be tracking these Bitcoin levels in real time over the coming days and weeks. If something major breaks, either up or down, you're going to want to be here for the analysis. Drop a comment below and tell me, do you think this is the buy signal, or do you think Bitcoin has further to fall? I read every single comment. Let's talk about it. I'll see you in the next one. Stay sharp, stay patient, and as always, do your own research.